Hey there! I got a great message for you today. If you have any interest in using your IRA to buy real estate or just to make money in tax-free, and you darn sure better have interest in it, because this is the last vehicle left that you can actually do deals and legally make money and not pay taxes on them, and that's your Roth IRA. Now, a lot of people would give me this question, and in fact, this question really is well, how do I use my IRA to buy real estate? But honestly, the biggest question is how can I avoid all the back and forth with my third-party administrator, because it's a pain in the neck. Every time I want to order an earnest money deposit or collect a rent payment or make a mortgage payment, I got to go back and forth with my third-party administrator and get them to send a check, and it's making me old. So look, that's easy to fix. And that's what I'm going to fix for you right now. I'm going to show you what I do. I'm going to show you what you can do. And I've talked to several third-party administrator owners of the company, and they tell me this is perfectly fine as well. So here we go. You're going to need an LLC, sorta. You're not going to need it, because this LLC is going to be owned by your IRA. So you simply have your IRA form an LLC. And put $1,000 in there or whatever, and in this case you will need a direction of investment letter from to your IRA to go ahead and put $1,000 in this LLC's bank account once the LLC gets set up. You can form an LLC by picking up the phone and calling companies like Business Filings or Company Corporation, or just a whole list of them. Go on Google and say, I want to start a company, and here come a whole list of companies that will form you an LLC over the telephone. You need a credit card and an LLC name or two or three, and who's going to be the officers in the LLC. And literally, once that name is approved, you got an LLC. Now, once you have the LLC name approved, now you're going to need an EIN number. The companies that form them for you will get that for you if you wish, or your CPA can do it. And then when you get the documents for this LLC from the company you called, now you can take them to the bank and start a bank account for that LLC. But now here's the key. That LLC is not owned by you. It is owned by your Roth IRA. Your IRA should own 100% of it. Now, could I have husband and wife's IRA owning each half of it? Yes, I could. As long as you are not personally involved in this LLC. You cannot own part, and you have your IRA own part. Your IRA totally owns this LLC. Are we clear so far? I hope so. All right, now here's some key points. Number one, you cannot manage this LLC. If you manage this LLC, you are controlling your IRA's money, and that is against the rules. So the smartest and the safest and cleanest way is for you not to be the manager of that LLC. Now, come on, we all know you're managing it. You're just not managing it. You're going to be directing what's going to happen with it. But somebody not in your linear descent, that means your parents can't manage it, your grandparents, your children, your grandchildren, nor your wife's parents, children, and so forth. So you have to get a manager that's outside of your linear descent. Your brother can manage it, your sister can manage it, somebody you know can manage it. Anybody that you semi-trust can manage this LLC. And keep in mind, you need to trust them, because you're not going to be writing checks. They're going to be signing checks. The manager will sign checks, even though they're checks you directed. So make sure you get somebody that you can trust to manage this thing. You should pay them whatever. Pay them $100 a year. It's adequate payment, or whatever you think that you want to pay them out of the proceeds that you're going to generate by using this entity to buy and sell or flip houses and so forth. By the way, what kind of deals can you do in here? Any kind. You can do axe deals, wholesale deals, rehab retail deals. You can do owner financing deals, lease option deals. Anything and everything you do outside your IRA, you can do inside this account. But now your IRA is not the one doing the deals. The LLC is doing them. Your IRA just happens to own the LLC. But you cannot be the manager of that LLC to avoid self-dealing rules. Folks, you want to make sure you're up on self-dealing. Self-dealing, if the IRS catches you self-dealing, they literally can wipe out your entire IRA and then some. Then not only can they wipe out your IRA, but they can even charge you penalties that are in excess of what you have in your account. Don't even come close to self-dealing, and then you won't ever have to defend yourself against it. If you're not managing this LLC, you can't be accused of self-dealing here. All right, that's number one. Or number two, all you got to do at the end of the year is send a K-1 that your accountant's going to prepare on the LLC to your third-party administrator, regardless of who you're using. Equity Trust, Quest, American IRA, I don't know, there's so many of them out there, it doesn't matter. They all just need a K-1 at the end of the year. And that's all the accounting that you have to do out of your LLC to satisfy the third-party administrator's rules. Now, they have to report to the government, so you just send them a K-1 and you've done what you need to do. However, keep it clean. This entity needs to have only your IRA stuff in it. Don't do non-IRA stuff along with IRA stuff in this entity. You could, and you could even get away with it, because since this is not managed by you, it's not your entity. But guys, why? Why do that? Keep it clean. You do not want to have to try to go back and account for things that don't have anything to do with your IRA. Just don't do anything but IRA deals in that entity, and then it's very easy to do a K-1, plus it'll save you a lot of accounting bill. All right, next. How do you take title to properties that this LLC is going to buy? The answer, you take title to properties in a land trust, just make the LLC the beneficiary. Let me say that again. You use a land trust to take title to the house, you make this LLC the beneficiary, thus indirectly your IRA is the beneficiary. I do not want your IRA's name on anything except on the ownership documents of this LLC, for your own safety. You're going to need a different LLC as trustee. You see, your trustee and your beneficiary cannot be the same company or the same person. Now don't get me wrong, you are not your LLC. So your LLC could be the beneficiary the trustee if you were individually the beneficiary. However, in this case, you're going to make the LLC the beneficiary, so it cannot be the trustee. So you're going to need a different LLC to be the trustee for all your land trust. Now that same LLC can be the the trustee for your land trust, regardless of whether they're inside or outside your IRA. That has nothing to do with self-dealing. In other words, another LLC sitting down here. Let me draw another one here. There's another LLC right there, strictly for using as the beneficial interest, and in fact, this could even be your operating, the trustee. I don't know why I keep saying beneficial interest. Anyway, this could be it has to be a totally separate company to be the trustee. But I do not want, if you're going to make this company the beneficial interest, it cannot be the trustee. That's all you got to remember. And now let's say I'm doing lease option deals. If I'm doing lease option deals, then I probably would use this LLC as the lessee on the top of the lease option agreement when I'm leasing it from the seller. And that makes it real simple. The LLC is the one doing business with the seller, even though the IRA owns the LLC. So all rent payments then come in, get deposited in this LLC account. The LLC account makes all outgoing mortgage payments, pays all the cost of the lawn mowing and whatever all the incidental expenses are. So all of the profit goes right there. When the house is sold and cashed out, all of the profit goes right there in the LLC. So now you have one entity, one accounting, one EIN number, one bank account. Just make it real clean. Do not do anything but IRA properties in that entity right there. Okay, so I think that's about it. If that don't generate questions, I don't know what will. But I'll tell you, it took me a long time to figure that out, because I used to be one of those guys that go back and forth with the TPA, third-party administrator, and tick me off, and they delay me by a day or two and charge me all kinds of wiring fees and crap, and I got tired of it, so I went and found the best answer. Now you just got it absolutely free. See you soon.